Yo, 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 CPA Strength here, back with another video, possibly my best video ever. Strongest in the game. Anyways, this is 119 accounting for beginners. Let's have some fun, let's learn some stuff. If you're new here, I have a playlist of all my accounting for beginners. I teach thousands upon thousands of people. Please check this playlist out. It'll be good luck for life. Like the video for a free cookie. Be in the mail two business days. Let's get into this here. Okay, in 117, we did this journal entry. We had a note payable. Now we borrowed money from the bank with interest. It was an interest-bearing note. So on April 1st, this was the journal entry we created. We debited cash because we got cash, and then we credited note payable because that's a liability, and we owe the bank $6,000. So debit cash $6,000 and credit note payable to the bank for $6,000. That was our journal entry in 117 when we borrowed the money on April 1st. Now on Accounting for Beginners 118, we calculated the interest. If you want to see how we calculated the interest, please check out that video. The interest was calculated for $300. So in this 119, we're paying back, Dorn CPA, paying back a 6-month note payable of $6,000 plus interest of $300 from April 1st. Paying back bank a total of $6,300. Now first thing, we have to figure out what day. This was April 1st, our old journal entry. So the journal entry today, 6 months later. I know it's kind of juvenile, or I always do my fingers for the days because you have to do like a full month. Sometimes if it was say April, the end of the month, you know, you don't include that month. You go to the next month. So anyway, 6 months later, let's see. April, May, June, July, August, September, October 1st would be the day we're paying this back. October 1st would be 6 months later, 6 full months have passed. We're paying this note payable. We're paying a note back. I think a loan would indicate no interest. A note usually indicates that there's interest on there. So now we're doing a note. We're paying back a note payable. We're paying back principal. We're paying back principal of $6,000 and then interest of $300 for a total of $6,300. Now we're going to use DC Adler to help us out here. DC Adler, you've got to know DC Adler. It helps so much. That's the #1 thing that helped me pass my exams to be a CPA. So I could be the strongest CPA in the game. If I didn't pass the CPA exam, I would just be the strongest accountant in the game, and that ain't right. Anyway, so we got debit, credit, asset, draw, expense, liability, equity, revenue, DC Adler. I always say, let's work on the cash first, okay? So we're gonna work on the cash. What we got? We're paying back a bank $6,300 in cash. So we're gonna have less cash in our bank account. You know, we're gonna have less money. What is cash? Cash is an asset. If our asset was going up in value, we would debit it. But our asset being cash is decreasing in value, so we're gonna credit it. So we're gonna credit cash of $6,300. All right, that is our credit. Now, what's our debit gonna be? Now we know these always have to equal, but this one's a little more tricky because we're actually gonna have 2 debits, and you can have one debit is most common, but you could have 30 debits, 1 credit, or you could have 1 debit, 20 credits. They just the end value has to equal. Now, out of the $6,300, what did we pay? You might want to say, the untrained person might want to say, oh, note payable. But the note payable was just $6,000, and on our balance sheet, our general journal, it's going to have that we have a note payable of $6,000. So if we put note payable $6,300, it wouldn't match up right. On our balance sheet, we'd have a negative note payable on the balance sheet, and you know you're doing it wrong then. So we're paying the note payable off in full, the principal of $6,000. So let's think. What is a note payable? A note payable is a liability because you're payable to somebody else and you owe them, so you're liable for that. Here's our journal entry from April 1st. It was $6,000. Our note payable was $6,000. Now you're paying off that whole note payable, so you're lessening the note payable. You're lessening the liability. So if the liability is going up, we'd credit it, but we're lessening the liability, so we're gonna debit it. So we're gonna debit note payable in its entirety for $6,000. Note payable, $6,000. Are we done? $6,000 equals $6,300. That ain't gonna work. That ain't gonna work, Jack or Jill. Go up around the hill. Ain't gonna work, okay? So what else? What else was? If the note payable, we paid that off. See, so now in our note payable, it's gonna zero out in our general journal, because we had a liability of $6,000, and now we reversed that. So our note payable was paid off in full. We need $300 over here. Let me just put $300 in here. Now this could be a number of things, but we know we need $300 more. So now 6,300 equals 6,300. What was that 300 from? Interest. Interest is an expense. Interest expense, right? It is just the cost of doing business. It's the cost of doing the loan. We needed the note to keep our business running. So it's just the cost of doing business. Interest expense, $300. Does that make sense? Is our interest expense account going up or down? Let's say from this journal entry, it's going up because we're adding $300. So does that make sense? If you're adding to an expense account, it's going to be, look, it's over here, DC Adler. So if the expense account is increasing, we're going to debit it, and that works out for us too. You're not really going to have many expense accounts being credited or many revenue accounts being debited, because that would be just like a reversal. It doesn't happen very much, but that's besides the point. So this is paying back a note payable with interest expense. I hope we learned something here. I hope we had a little fun. I don't know, I'm getting back into it, I'm having fun. I'm getting back into the gym. I'm gonna start going every day. Keep this positivity going, keep this positivity growing and going. Now I've been on a little roll here. I am gonna keep going, I'm not gonna stop. You know, I do this thing where it's like, oh, these videos aren't getting enough views, the videos aren't good enough. You know, I just gotta do my best and keep going. Keep showing up. What do they say? Showing up's 90%. 90% of it's showing up. And if I would have kept showing up for this past year, which I didn't do any videos for a long time, I would be way better. My channel would be way better off right now. My videos would be getting a lot more plays right now, and just everything would be a lot better. What can I do? I can't go back in time and do those videos. I can just go forward and do better from now. So thank you for watching. I hope you guys crush your goals. I hope you gotta stay positive, and I'm done being depressed. And I mean, I fight it every day. I fight the depression, the anxiety, but I'm just gonna go forward and punch it out. So until tomorrow, because I will be back tomorrow, I'm back to doing daily videos. I don't care how good I think they are, how bad they are, how much time I have. I'm doing a daily video from now on out, okay? I'm gonna get a time slot, but anyways, oh, this was paying notes payable back. Anyways, until tomorrow, deuces.